Big picture for 24 for gold and silver. Last year, I would say I was a little too conservative on the gold market and maybe a little too optimistic on the silver market. I thought that gold would have kind of a rough time because I thought interest rates were still going to be going up. And I thought that it would stall somewhere under 2,000, and then it would do a little bit better later in the year. Well, that's pretty much what happened, but there was an upside spike that took it up to 2150, but that really didn't last long as gold did end the year right around the 2055 area. So gold did a little better than expected. I thought silver would get up to about 2750. It peaked at 2650. And I was actually quite positive in the silver market, and it ended up to be a bit disappointing, but still not that far off from what we expected in the gold and silver markets. Let's look here at what's coming in the next year. Of course, there's lots of stuff going on geopolitically, and that is supportive for the gold market since there has been the war in Israel and Hamas. The gold market has done better. Not sure that it's that related to it as much as the fact that the U.S. just does not stop creating money because of the massive deficits. And of course, the more money there is, the cheaper money it gets. So in other words, gold's price in relationship to money, to paper money or fiat money, tends to go up because of all of the increase in the amount of money. The gold market against other currencies has done spectacularly better when you look at it compared to the yen, which has been extremely weak. So maybe gold has got catching up to do based on its relationship to the U.S. dollar versus other currencies. That makes sense to me. I'm going to show you this gold market now, and it's going to be a pretty deep analysis, and you'll get a good sense for what I expect going forward, and that is much, much higher prices. Let's take a look here as we look at the monthly chart on gold. So we're looking here back to the year 2000. Very important to be looking at this period right over here where gold was trading down in the 200s. And that was around 2000. And of course, we had the dot-com bust, and Greenspan tried to save the world by lowering interest rates for a very long period of time, keeping them down around 1%. And he literally destroyed the dollar. It fell like 41% during this time period here. And you can see what gold did as it surged from in the 200s up here to nearly 2000. And that was about a 8 to 9 times increase in the price of gold. That was, of course, based on a weak dollar that you can see. I'll show you more about that in the dollar in just a few moments. Now, what we're looking at here are the major harmonic cycles that you could see right in here. This big gold cycle right here made up of a half cycle. So this is a dominant, intermediate, and a minor cycle. And these cycles are very consistent, as you can see. You can see right in here where in 2000, where we had the pandemic response and printing all of that money quickly sent gold up from the 1400s here up into the close to 2100 right there in the pandemic response. So you can see when there are periods of significant fiat money printing, those are periods that gold does very well. So where we are right now is very significant, and I want to show you what that looks like here in the gold market. The market that we're looking at right in here is in this very significant uptrend, and you can see how I have this drawn way up over here. I'm just going to grab this period right in here so you could get a closer look as to where I think we are right now. So this period right over here is just a period of a lot of potential strength. Now, there is a buy period coming up in mid-24, and that is where we think that there's a decline coming here in the gold market. There's a sink where it syncs up with the intermediate prices, where it likely pulls back over here sometime into that mid 24 period, where it certainly could get down close to that 2000 number again, or maybe a little bit below that. But then right over here is where it really has a very strong potential. We're going to call for 2024 after it makes a low somewhere around 2000 and maybe April, May, or June in that area. And you can see that's these two blue lines are the cycle trough timing period in there in that window. Then we think it'll be moving strongly to the upside, well past 2200, and then to this resistance right over here. That's 2335, 2330, right at that fib extension zone. Then there are these fib extension target zones that are created from the multiple lows in here, and those come up here. This is 2665, and you can see that we're projecting after a move down here, late 25, early 26, all the way up here into later in the decade, 27, maybe 28, where the price comes up over here to 3,000, something like that. Now, see this note right over there in 26 or 27? This is something that people are going to remember me for being very right or very incorrect. And when you see the stock market analysis, you will get a sense for why I think that coming in this next quite a number of years, there are bear markets coming. And I think that the price of gold and the S&P 500 are going to cross at some time in this decade. And I'm going to say probably more like 2027, near 3,200. That is a pretty bold call. S&P 500 and the gold price cross near 3,200. So that would be a very, very bullish projection, of course, for the gold market, and a very bullish, very bearish projection for the stock market, which I think is going to have waves of bear markets over the next decade. So I'll show you that moving forward. So this is the look at the gold market, as you can see right in there, and this period that we're looking at in the gold market, in my opinion, is a period that is extremely positive, though the first few months of 2024 look to me like it will waffle around, as I said, get somewhere around 2,000 or under that level, before it then has a surge up near 2,300. So that's a look at this particular monthly chart in gold. I want to give you a little bit that is supportive of that in the gold market. And you'll be able to see right over here this gold chart, which is amazing because I have all of the Fed actions on here. The QEs, the operation twists, the QTs, and the amount of rate cuts and increases that you can see in here. Plus this line right over there that you see is the dollar overlaid on it. So in here where Greenspan was killing the dollar, of course the gold market went up. This was QE1, QE2, operation twist, QE3 right there, and you can see you had that big move to the upside, and then the correction in gold that went on over here, and that was as the dollar was in a rebound stage right there. Now this is where the taper tantrum was, and that's kind of what I want to look at in this chart. This is where Yellen was trying to increase rates in here, and there were 3 increases in 2017 and 4 increases in 2018. And you can see gold was just in this kind of basing period, as you can see right in there. And then once they started to cut rates again here in 2019, it was off to the races again in the gold market. You can see that right there. So that was the period where interest rates started to get cut again. And then in 2020, you had these emergency cuts. They took it down to minus 25 basis points, and that's where the gold market was surging again. So here's that period right over here where the markets are pricing in 6 or 7 rate cuts already. And you can see that the gold market has done really well in here. The reversal scout turning up right in there after a brief correction. And here's that minor cycle right there that we're talking about in this potential dip to around 2,000 or a little bit lower right there before it then takes off and makes these much higher prices as we expect. 2023 ended the year with a $34 trillion deficit. There is no end in sight to deficits. The 2024 will end with significantly greater deficits, probably above $36 trillion in deficits, and no end to that massive government spending. It doesn't matter who gets elected. Because if it happens to be President Biden, we know the kind of spending that he is willing to do. And if you look at the potential for a return of President Trump, and those, of course, are the two favorites right now, he showed no sense around reducing deficits, reducing spending, and even pushing for the Fed to push rates down much more. So no real look at the potential for a change in the debasement of the dollar, the spending that is massive and that is very likely to be fueling more upside here in the gold market. So I wanted to show you this chart. I thought it was really very important to look at. Let's just go back to that other gold chart right over here. If I can get that up. Move this out of the way. And here we are back to this gold chart right over there. So this is really the look that we're expecting moving up into those target zones over the next year. Of course, this is really a video where we're looking at 2024. So I'll just take a quick tight look in here where we're just looking for a pull down in here and then a move up. It probably, I'm going to say easily over 2,200, 2,300 right over there, or a little bit higher is very reasonable for a price target here in 2024. Let's go to the silver market /SI. And this is very interesting right in here as we look at some comparisons to past times. Let me just blow this out a little bit. And look at the, I'm showing you two major harmonic families right in there. And you can see that there was a mid-cycle dip. If I just duplicate this and bring it to the mid-cycle period, which is right here, you can see how then I'm looking at kind of a half cycle right in there, and where the half cycle right in here was the biggest decline, and the half cycle right in here the biggest decline. Now let's compare this period right here that we're looking at, which is 05 to 2010, where it had that big upside move, and this period right in here. You can see that this decline on that that half cycle right there was steep, as you can see right there, but above these lows, just as it did right over here. Now look at this cycle right there. That was the first quarter cycle after the nesting at the half cycle right there. It is almost identical right in here. And that is showing you that there is a strong likelihood that when this quarter cycle completes the base, as it did right over here, it then takes off. I don't know that it's going to be, this went from 15 to 50 basically, which was, let's say, it tripled during that time frame. I'm being much more conservative here and just saying it's going to follow the ideal projections in here. And then once we get this dip that we're looking at in here, it's going to take off on the upside, but maybe to more realistic levels. Of course, it could be an upside panic, and silver has been held down for a long period of time. Also note here, the reversal scout is still negative right over here as it went into this quarter cycle correction. Here it was so strong it actually stayed positive. So this was a slightly stronger period. But again, this is exactly the same spot on these harmonics right here and right here. And that really makes quite a bullish case for the silver market. Let's look at what we're expecting in this coming year. So this is the same thing we were looking for in gold. All metals have ideal sinks or a correction into mid-24. They all look that way, copper, platinum. And we expect in here that it'll come down into this buy zone. It's weak right now, and this is this comes in around 20, let's just say $23 down to about $22, maybe a little lower than $22. And then after that, late April to early May, we're just estimating based on looking at the weekly charts, then taking off with the gold market. I want you to see that we just made that comparison to 2005 to 2010, but all metals are in a period of potential surge to the upside from mid-24 up through mid-25. I've made no secret that I've been accumulating metals, and in the last couple of months I've been buying a lot of the miners, and I'm going to keep doing that, especially in this early part of the year, because I think that there is such a high probability for this to be going strongly to the upside. You see that level right over here? I'm just going to move that out of the way so you can see it. That's 78.6% fib warning right there. That's at around 1930 in the silver market. That's $4 down from here. That's the warning that this very bullish analysis is incorrect. I would like to not see that happen. Because, of course, of my positions and because this analysis, to me, would be ruined if that did happen. So we always want to take a look at what that level would be in the silver market. But I think that period of chop in here in the first quarter and into the second quarter, and then sometime in the second quarter to third quarter, a big blast off on the upside. We're going to project that silver in 2024 is going to get up to the bottom of that fib extension level, which is right around $30 at some point. And I expect that to really come at the in the last half of 24, just as I do in the gold market and all of the markets in the metals markets. Copper should do exceptionally well. Platinum do exceptionally well during that period. I'm not showing that analysis now, but level 4 members can have that by looking in our on our stock grid page for level 4 members, because I'm going to post all of these there, all of the major futures that we look at. So this is that very, very good look at the silver market. You can see, which we're expecting to be moving up into the high 20s and potentially 30 into this year 2024. One more look back at gold so you can see the comparison in here as we look at that gold market, and you can see the same thing, the decline into the second quarter of the year and the surge with all metals with a potential of about 2,300. That, in my opinion, is a conservative estimate into late in the year, high 2200s, 2300. And these are what I consider to be ideal projections right there. They're conservative, really, based on what we're seeing in here. And again, if this gets underneath the 78.6 level, which I will put in there for our members at some point, if it begins to threaten that, that will then warn me that something different is happening. But right now, I don't think that's the case. That is the look at what I consider to be a very bullish metals market for 24, but the real move's coming in the second half of the year.